All right, energy stocks largely in the red today as the price per barrel falls on higher than expected inventories, not just for oil, for natural gas, and we saw that particularly pronounced decline in natural gas. What do we make of this? Is all of a sudden inventories going up and the price of oil going to crash? I don't believe so, and I have no indication to believe it's going to be the case that the price per barrel of oil is going to crash. I don't think that's in anyone who is involved in the energy industry's best interest, and I think we're a long ways away from that being the case in this market. We've had similar instances for a very long time. As this run has just continued to power forward, we've actually had more powerful downward forces in terms of supply. The United States emptying 20 million barrels of national strategic reserve supplies onto the market, having no effect. China doing a similar undisclosed amount, having no effect. And today, at the lows, we were down around 1.7% overnight per barrel on WTI crude. And as the day progressed, we went into the green and pulled back a little bit into the green. So not too much to look into here, in my opinion. We've just had a big run. And, as we've said many times, it has been a conventional Wall Street wisdom from people like my dad and across the market. Stocks take the elevator on the way down and the stairs on the way up. And we're simply taking a stair. Today we got a positive rating, new addition, a new buy, strong buy, whatever it was, on Energy Transfer. This is despite better than expected inventories. If people were super bearish on the sector, they would not have chosen today to make a positive call. However, that's the case. And here on this channel, we're not afraid of anything. We talked about yesterday, tomorrow might be down, and today was down, but barely at all, and still looking good. We still saw a massive recovery in the price per barrel, despite it being down after that inventory data number, which is no big deal, in my opinion. We'll see how things develop from here. We're remaining long in the position. That said, there's one position we're not remaining in any longer, and that's the Microsoft short. We've seen a nice gain here. We saw the nice gain in the Apple short that we then closed. Rates have obviously gone up, and I do expect them to go up, but I also expect there to be nearer term positives that will likely not have a negative impact on stocks, one of which is the resolution of the debt ceiling and that BS that happens every year or so and never ever causes problems, except becomes a media frenzy because it gets people to click links. And I expect that to be resolved, as it always is, and rather soon. And I don't think that's going to be a negative catalyst for the market. I think that's going to be a positive catalyst for the market that implies further spending. And I don't see the market selling off on the notion of further spending. So I'm closing that short at a nice handsome gain. And we'll move on to the next thing, being a short-term energy option, which is not typically taken. But more importantly, Editas, okay? We aren't just energy investors. This is not an energy portfolio that I'm running, although it is probably my most heavily weighted area of my portfolio. Another area of my portfolio that I like, and I get it, rates rising, kills stocks, particularly tech stocks. My opinion on that is, yes, I understand that effect in competition for long-term investor dollars, but I believe if a company is growing faster than the rate of interest rates and the increase that they see, they can outpower that effect. And one company I think is having that effect is Editas Medicine. If you go to the origins of this channel, one of the first videos we ever created was about CRISPR therapeutics. It's in some playlist on this channel. We talked about how CRISPR was enabling the ability to play God, to edit genes, and to cure all genetic disease. Well, today, we got some data out of Editas that they are doing just that successfully. If you go to John 9 in the Bible, it's a passage in which Jesus cures the blind with clay. Now, we're not using clay, we're using CRISPR, but Editas just released preliminary data that they are doing so. However, the stock fell 20% at the lows of the day. Why is that? Well, apparently when you use the treatment, it gives you a little bit of irritation. A little bit of irritation. You know, I don't know any medical treatment that comes with no irritation. You get a vaccine, there's irritation. You get a surgery, there's a whole lot of irritation. You get anything, even Advil, even though you don't feel it, there's irritation. Irritation. People decided, ooh, it's not 100%. There's not any absence of any irritation. And they decided to sell the stock despite people, every single participant in the trial, gaining success. I focus on the success. So I'm buying that stock down 20%. And hey, we like our energy. We also like our revolutionary, small, cheap, early stage tech stocks in this portfolio that we classify as growth. We don't consider Microsoft growth, even though they create many great products. We don't consider Apple growth, even though they create many great products, because they are already so big. We consider growth 10x. We're not saying Microsoft is going anywhere, Apple's going anywhere. We're saying Editas can go from 3 billion to 30 billion to 60 billion to 90 billion and beyond. Okay? So we buy that down 20% below 3 billion. That's the portfolio construction. That's how we're thinking about things. We're not freaked out about anything. We're not freaked out by a 1.7% downside move in oil that later turns positive within the same day. We're not freaked out about a 20% move in Editas. We're buying more. We're looking at the fundamentals. We're finding out about that study, and we're realizing the people who are selling are idiots and giving us what we want, cheaper stock, and we're buying it. Okay? That's the deal for today. And until next time, peace out.